Good morning, everybody. Hey, welcome to Thursday, July 20th. Hope you're doing well. Thanks for joining us. And I hope that we got some good information for you today as earnings season continues. Jobs comes out today. We'll have a few more economic numbers to talk about when Dave joins us here in just a second or two. But before we do that, let's not forget that there's only so many things in this world that we can control. We can control your retirement portfolio by controlling the amount of risk you have in that portfolio. You need to know how much you have in order to control it. That's why I developed the core retirement design. Give us a call at 863-382-0037. Hey, with that, we got Dave coming up next.
REO Speedwagon, and Morning Dave here. It is 8:42 now. It's 18 before 9. We always check in on your money and see what's going on with your IRA and 401k at this juncture. Yesterday, not a half bad day. Let's see if we can keep it going for today. I'm seeing the odds not necessarily being in our favor. Let's head down to Statler Financial Services, where Phillip Statler's standing by on the phone. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today as we're getting close to the end of this week. And you're right. Yesterday was a great day. Surprisingly so, I think, based on, not a whole lot in the economic news, but it is what it is. And we're heading for a good week right now.
It sure does look like it. To summarize yesterday, everything was up. The Dow was up by 0.33%, up 109 points. Standard & Poor's up almost 11. NASDAQ up a little over 4. And even the Russell 2000 was the better part of 0.5%, up almost 9 yesterday, which means we're still holding under 14 on that volatility index. And I like those relatively flat positive days. That's a gain that you can actually hang on to and expect to maybe keep over time, until, of course, the federal government starts giving us data dumps that are good news, bad news, which is kind of what we got this morning on the unemployment claims, right?
Yeah, exactly. So, less people are filing for unemployment, which is good news for the economy, but bad news for the Federal Reserve numbers.
Yeah, they're trying real hard to slow down the employment front, and they aren't succeeding so far on that front anyway. We were expecting an increase to 244,000 first-time jobless claims last week. It went down to a 2-month low of 228,000. And I think we peaked into that 250,000 range, which is always the rule of thumb for what a normally functioning economy is. We may have done that twice over the past 3 months. I mean, we just can't seem to throw people out of work, which, like we say, is really good news for the economy. But when you got a Federal Reserve who's ready to kneecap us with another interest rate increase in a week or so, it's not exactly what you have in mind.
No, it's not. And you're right. On the employment front, it's good news because, I'm sure there's people changing jobs, but they're not having to file unemployment because they got another job lined right up. So, from an economic standpoint, that's good news for our economy. But like you said, the Fed's not going to like that number.
And we've been yammering about this back and forth, just ruminating as we go. They keep promising us a soft landing. Now, if they can do the right thing as far as interest rates, and you and I tend to agree that another month's pause wouldn't be a bad idea, the inflation numbers are trending downward. All of the macros that we're looking at are trending in the right direction anyway. As a matter of fact, the core consumer price index actually got down real close to that 2% number, one of our major inflation indicators. Maybe it was the PPI. But, we're getting close to where we want to be, and we're trending in the right direction. And we're still holding up a downright hot employment picture. That's really kind of a sweet spot. I would think that would make the Fed happy, but I'm not optimistic they're going to stay happy with that, are they?
No, and we will definitely find out in about a week.
And we will find out probably the hard way, too. It is earnings season, got a whole bunch of stuff going on, just tidbits coming off reports that we had earlier in the week. I love this quote. The CEO of Goldman Sachs, David Solomon, told an interviewer yesterday that he feels, quote, very, very good about the firm's strategy shift. Wait a minute, their profit was down 58%. That makes him feel good? I wonder what he was expecting, right?
Exactly. So it's You got to keep people on the edge of their seats, and he's obviously wanting to keep his job for sure.
Yeah, that sounds like, hey, I planned it that way. Never mind the fact that I'm bleeding. The other element that hits Carvana, we've talked about them. They went through a really rough haul last year. Got caught up in a couple of regulatory disputes, one of them here in Florida, and they were really on the ropes for a while. They've recovered nicely, and I was giggling about this before we went on the air. I just love justice. All of the investors who decided to short sell Carvana, it's now cost them $2 billion making up their short sales because Carvana's stock has recovered and it's up 1,000% this year. I mean, I hate seeing people lose money, but I don't like short sellers just on general principles. So I kind of enjoyed hearing that little bit of news.
Yeah, Carvana, they made I think it was last week or so, they were able to make some adjustments in their debt and come to some agreements with some of their debt holders. And that really kind of helped boost them up this week.
Yeah, they're still not exactly the world's most successful business, but they've recovered nicely, at least to regain viability. And yeah, it's rather like all of the Reddit guys that went after those meme stocks last year we were having so much fun with, basically shafting over the guys that were short selling something. This time the market did it to them, and they didn't even need help from the Reddit gang. It was kind of nice.
Yeah, it worked the way it was supposed to, right?
Yeah, and like I said, I just love justice. Let's see. We are in earnings season, and last night after the market closed, a couple of big names reported. Netflix is one of my tidbits that I had on the showbiz dish earlier this morning. Was that Netflix is now killing their $9.95 entry-level commercial-free tier because nobody's buying the El Cheapo version of Netflix that includes commercials. So they're just saying, well, if you want to cheap out, you got to watch the commercials. We're going to pull the $9.95 tier. Evidently, they didn't do as well as people expected them to with their report yesterday either, huh?
Well, they didn't. It was a mixed bag, really, Dave. They did beat on earnings for this past quarter significantly. I mean, they came in at $3.29. The expectation was $2.86. So they beat pretty well on earnings. However, they missed on revenue. And that was, pretty substantial miss there. And so that was a big deal. And then, like you mentioned, the whole ad deal is going to catch up to them too. But they're trading down 6.5% right now. Been down as much as 7 earlier.
And geez, you talk about trading downward. When you told me what Tesla's report said, my first reaction is, boy, it's a tough room this year. You can beat on profit and beat on earnings per share, and they still don't like you, right?
Well, that's right. So Tesla is reported their second quarter earnings, and they beat expectations on like you said, both the top and bottom lines. Recorded on the quarterly revenue. However, they are trading down today. They've been down as much as 4%. They're down 4% now. And that's because, we've talked earlier about in the quarter, they lowered their prices, which means that their operating margins have come down, and that's not helping them. Those recent price cuts are eating into their revenue and profits down the road. So the margins are down, and they don't like that. So they're trading down about 4% this morning.
Yeah, like I said, that's a pretty tough room. I mean, it's basic economics. You're looking for a market clearing price. And if Tesla found out their cars were going for too big a price, you can sell them profitably at a lower price. That'll clear the market for you. Hey, that's all good news. I mean, if they're going to run if their operating margins are only 12% instead of 15%, if they're making the numbers, what the heck do they want?
Yeah, exactly. So the other thing I want to mention about those two stocks in particular is because they're down, they are weighing heavily on the NASDAQ today. So that's got the NASDAQ squarely in the red this morning.
That may very well be reflected if we get to the futures. How about some good news? I understand we're still flying like crazy, are we?
We are. Both United Airlines and American both reported, both did well. I mean, United had record quarter earnings, and it expects a strong quarter for this next quarter as well as demand surges. Kind of the same thing Delta said earlier this month. They're trading up 2.5%. American also surpassed expectations for their second quarter, and they raised their profit forecast for this year. However, they're not quite on the same side of the coin as United for some reason. There must be something in the details we're not seeing yet. They're trading down 1.1% this morning.
I wonder if it's because they duct taped another Karen to a seat somewhere or something. They seem to have a disproportionate share of the Karen fits on their airline. Other indications this morning?
Hey, we got some other ones, big names. IBM reported they did miss on the second quarter for most of it's based on their infrastructure division. Earnings top, revenue missed. They are trading down about 1.4% this morning. Johnson & Johnson's got a nice little bump. They beat on earnings, hiked their full year guidance. For them, they're getting a lot of hype from their robotics division. Well, they were up earlier. Now they're down about 0.1%. You just never know. We had, well, let's talk about this one. We talked about housing and some of that this week. D.R. Horton.
Mm-hmm. Yes, big one.
Yep, they beat on expectations as well by over $1 a share. They came in at $3.90 versus $2.79 expected, and looks like revenue beat by 1.4 million, 1.3 million, somewhere in that ballpark. Yeah, so they really had a good quarter. They're up 4.4% this morning.
Kind of expect that. Got time for one more. Give me another household name.
All right, so let's look at Taiwan Semiconductor, semi-chip maker. The company posted their first profit drop in 4 years. Demand for consumer electronics is slumping during this high inflationary period of time. And so that's got them trading down about 1/3% right now.
Geez, that's a household name.
Well, you know.
We'll take what we can get. Again, it was an update yesterday on Wall Street. Pretty healthy percentages. You kind of mentioned that Netflix and Tesla were kind of weighing the NASDAQ down. I'm looking at the futures, and I'm seeing what you mean. What are we doing 45 minutes early?
And the only thing that's got a little bit of green to it is going to be the Dow 30 right now. And it, like I said, it's a very little green. It's at $14. So very, very minimal. S&P 500 is down 1/4 point right now. The NASDAQ 100 is down 0.75%. That's $117. And the VIX is up just a little bit this morning. On the other side, we've got silver down about 1/4%, but still over $25 an ounce. Gold is down 0.2 as well. And then crude oil is heading up the wrong way, Dave, up 0.4%, $75.60 a barrel. I think it may be pennies less than where it was yesterday, but still the wrong direction.
Too much. Yeah, that's true. Asian rim markets had a little bit of a sell-off. The Japanese markets were down by like 1.25%. Mainland Chinese markets down by almost 1%. Taiwan was the only outlier. It was up fractionally at the close this morning. Europe is fractionally up halfway through their trading day. Nothing exciting, but green ink at the very least 45 minutes before we start throwing money around over here. Somebody needs to find out how to make a retirement happen. If you were betting on Netflix, well, maybe you got too much risk in your portfolio. How do I find you to get the risk out?
You know, risk is important that people really understand that risk the closer you get to retirement. That's why I developed the core retirement design to help people isolate the risk and make sure it matches up with where it should be, where they are in their work life. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday morning, News Talk 730, 95.3 FM.
And back here again tomorrow about the same time on Light FM. Thank you so much, and you have a good day, Phillip.
All right, you too.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. Join us again tomorrow, same time, same place. Until then, have a great one.